What's going on, guys? This is OZ Bulls coming at you with another little chart pattern from today. Gonna give you the basic info, some of the technicals, and basic rundown of a few trades, and hopefully you guys can learn to profit from it. Okay, so basically when I'm looking at a bearish market like we have right now, it's called a rolling bear market, where investors are pulling their money out of one end of the market, like biotech, anything like that, and dumping it into another one that has positive news. Now, that is not a very good model for economic growth because they're not actually putting more money in, they're just moving it around. And that actually plays really big into short selling because when you have a rolling bear market, if there's a company that comes out with bad news, there's a really good chance that investors are going to pull their money out and they're not going to be coming back to it for, a decent amount of time, usually at least a couple days. They're going to take their money, invest it in something else, and, see if they can get some profits back. So, essentially, during a bearish market, I really like shorting. You can short any time and make money if you're good at it, but in a bearish market, it's like clockwork. It's easy. So this is Capstone. They are a paper company. They had terrible earnings and revenue miss this morning, which was posted up. I saw it gap down. It was a big gap down, okay? Now, I did not play this out of the gate. It was such a big drop right off the beginning. I think it was down, let's see, I want to say 40%, 36%, something like that. And that's really, really oversold at that point. If you got something gapping down that much, you got to be careful if you're opening a short position. But so what I did is I waited. Now, typically when you get a big move down like that, you're going to get buyer interest coming back in. You're going to get a relief pop like this. And that's exactly what we saw. Now, here's the pre-market high of the morning, right around, let's see, 1165. So if you get a big enough pop, on a rare occasion, you can have a big sell-off in the morning, and then the buyers come back in, and it can actually get back over those pre-markets. And if that happens, there's a good chance that it'll actually continue upwards into the close. So what I was watching for is I was looking for it to come back up and hit somewhere around these levels. And it actually did. It worked out perfectly. As you can see right here on this chart on the left-hand side. Oh, by the way, this is a 2-minute time chart. Each of these little tickers here, or the price action bars, represents a 2-minute time period and the price change within it. Just heads up there. So right here is where a conference call came in. Now, I did not have any position in this until shortly after this. As you can see, right when the conference call began, it got a big spike. People were anticipating the news to be slightly better than what the pre-market had shown. Unfortunately, it wasn't. Let's see, the high here was 1176. It barely got above that pre-market, and then it just dropped right back down. And that is a really good sign for opening a short position. Now, if we look at, here we go. If you're looking at this chart here, this purple line is the VWAP, volume weighted average price. It typically serves as a really good point of resistance and support, depending on which way you're coming from, obviously. So it was able to get back above the VWAP earlier on in the day when it got that little pop after being oversold. When it came up here, it dropped down below the VWAP. And typically, I would have bought in here. I would have opened a short position here. It actually turns out that I wasn't paying attention to it. I was invested in a couple other things and keeping a close eye on them. So right around this time period here, it started to bounce around this VWAP, and it clearly couldn't figure out what it wanted to do. It was up above it, down below, a little bit up above it again. But then once we started seeing these bars here, where it started to shoot up, but it couldn't hold it at all, and it was dropping back down, that's a great indicator that the stock price is about to tank. So, because the volume weighted average price is above it, it serves as a resistance. Couldn't get up above there. Opened up a short position here for 3,000 shares and rode it all the way down. I got out right about here at, 9.88, I believe it was. Could have held longer, but I was afraid there was going to be a nice pop in the market towards the end of the day, and I would lose a bunch of my gains. So decided to lock in profits, and it turned into a really nice trade. Now, obviously, if you guys have any questions or comments, please feel free to shoot them over to me on Twitter or StockTwits. Again, that's OZ_Bulls. And yeah, if you guys have any questions about the technicals, because I understand, for new traders especially, it can be really difficult to kind of learn the supports, resistances, and what kind of candles you're looking for. So if you have any questions, just shoot them to me. I'd be happy to answer them. And hopefully, if you can, take away anything from this, you eventually will be able to learn to profit. Okay.